This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia Mangalam is here with us on the show. Guys, hi, morning.
Hi, good morning. How are we feeling today? There's just about 3% away from all-time highs on the index. So the bulls must be feeling good. But how are we guys feeling?
I mean, we're feeling good. We always feel good, Sonia.
I'm feeling even better today because yesterday I saw the game Mumbai Indians versus Royal Challengers Bengaluru. And the way Sky batted Surya Kumar Yadav, it just reminded me of the way Indian markets are right now. Mainly because for Surya Kumar Yadav, everyone says sky is the limit. For us, 3% away from all-time high. Mumbai Indians third on the league table. After we improve a little more, sky is the limit, perhaps.
Okay. Well, I think for the bulls, there is no limit, right? That's how it seems. But a couple of things working in their favour.
You know, there are a lot of things working in their favour, but I think we may have to wait a little bit till you get to the 3%, at least today, or maybe this week, because there are too many catalysts around the corner. You know, so there are two important catalysts if you really want to drill it down, at least for today, right? One is local and the other is global. And that's the reason why I'm saying that it perhaps yesterday, for example, it was a flat day. Could today be something similar? We'll see. So the Karnataka elections, the state of Karnataka votes. If you're a voter, if you're watching us from Karnataka, do go out and vote. The voting is today. And then you have the exit polls which come out in the evening starting 5 p.m. So that's the first one, which is the local queue. The bigger global queue in that sense, of course, is the US CPI data, which will come out around US market timing. And that will be the big mover for markets around the world. And both are important, right? I mean, Karnataka state elections kicks off this political cycle which culminates into the elections in 2024. There are many more state elections, but this is a big one. And out there, in terms of the CPI, the market is pricing in aggressive rate cuts in the second half of this year. If after the very strong labor market data, the CPI data also comes in very hot, I mean, the market may price out rate cuts, price in rate hikes or very high rates till the end of the year. So both are, in that sense, important. Now, the Nifty yesterday gave up gains and ended absolutely flat. All right, we were up about 65 points at one stage, and by close, there was nothing on the table. So the levels don't change very much. I mean, the moving averages change a little bit. On the way up, 18,450 is still the level to watch out for. It is a 78.6% retracement of the entire fall that we saw from the all-time high of 18,887. And on the way down, Friday's low, I mean, the Friday was a washout session. Monday was a full recovery after that. But Friday's low was 18,055, and that should not be violated if we do start to move a little lower. There is a bit of an intermarket divergence developing between the Nifty and the Bank Nifty. The Nifty has made a higher high. When I say higher high, I mean it's taken out the high from last week. So it's a higher high, while the Bank Nifty has not done that yet. So we'll see if, there is more to go on in this divergence. On the way up for the Bank Nifty, last Thursday's high was 43,740. That's the first one. And then 44,385 comes into the picture. So these are very near-term resistance levels to take out. On the downside, the low of 42,542 should not be violated if the market starts to test, levels a little bit on the lower side. Now, the point is, these are all levels which you should keep in mind in the framework if you're trying to trade the market. And, at extremes, it's a good idea to get in. But the fact is, there is a fair bit into the mix today. I mean, over the next 24 hours or so. So to my mind, I think to stay clear perhaps is the best strategy, at least for today's session. The SGX is indicating a 35, 40-odd point start, but expect a fair bit of volatility as the day progresses with both those catalysts playing on the minds of the market. I suspect some of the climb down that we saw even yesterday perhaps was with regards to going into this state election in Karnataka in a lighter kind of fashion, and the same may play out today as well. Sonia.
Absolutely, and I think, overall the sentiment is bullish, right? We track it minute by minute, so we don't, I mean, if you look at it from a bird's eye view, this market is trending upwards, so it's prudent perhaps to stay bullish on this market. Remember, we are consolidating around that 18,250, 18,300 mark, but in essence, we're just 3% away from those all-time highs of 18,887. So in that context, the higher highs that Prashant was talking about, that perhaps is something that could continue. The flows are also very, very strong. So it's been what? I think 9 straight trading sessions that FIs have bought in the cash markets. Yesterday as well, FIs bought about almost 2,000 crores, and put together, it's, over 5,000 crores of buying that we've seen in 9 trading sessions, or rather in May already. Also, the corporate earnings have been pretty strong. So you've had, overnight, you've had names like Lupin, Apollo Tyres, a lot of cement companies that have reported numbers, and strong growth through and through. So for Lupin, 14% revenue growth. The US margins have improved, which is important because pricing pressure was the issue there. For Apollo Tyres, the entire tire manufacturing space has done really well because of lower raw material costs, better top line, etc. Now, as Prashant was also pointing out, today the crucial data is the US inflation number, and that's important because it will offer some insights into what the Fed could do going forward and whether their rate hikes are working to ease sticky prices or not. So that's something that the market will look forward to. And in the US, it was a bit under pressure, but it was also because of earnings. So a lot of earnings came out, Airbnb, Twilio. Stocks were under a lot of pressure after the forecasts were weak. But I guess, the bulls have latched on to this market, have tightened their grip a bit. Yesterday was a bit of consolidation, but maybe just catching its breath before making the next move upwards.
Absolutely. The interesting thing is that we're currently in cruise control. Yeah. And while you're in cruise control, there could be some turbulence here and there. I mean, that's reflected in the kind of moves that we have this morning as well. Overnight, Wall Street was weak. We have most of the Asian indices trading in the red, but the SGX Nifty is in the green. Yesterday's last hour decline could totally be explained by the decline that we're seeing in Fin Nifty. So it was the Fin Nifty expiry that led to a decline in the last hour. We saw active calls at 19,400 and 19,450 telling you that there could be some resistance around 19,425, and that's exactly was the high of the day. And as a result of which, the biggest weight on the Fin Nifty are HDFC Twins. The biggest weight on the Nifty are HDFC Twins. The biggest weight on the Nifty Bank is HDFC Bank. So we saw a decline, a secular decline across all the indices. No problems with regard to the cash flows. I mean, FIs and DIs buying together, the net institutional flows for the last couple of trading sessions have been around that 2,350 odd crore mark. So, that's no problem. So what is it that explains the decline that we saw? It's the Nifty financials expiry and some short positions being added in index futures. The FIs have added around 5,700 short positions, and as a result of which their long exposure has dropped mildly to 48% as against 49% in the previous trading session. The congestion between 18,350 to 18,400 is explained by the call writing. Call writers are active at 18,350 and 18,400, both of them having a premium anywhere between 20 to 30 odd rupees, telling you again there is congestion out there. But put writers haven't given up hope. 18,300 put writers are still active, and there is a premium of 70 rupees available there, telling you 18,200 to 220 is a bit of a support. And that's really, the point that bulls should latch on to. The Nifty support has moved higher from 18,000 to 18,100 to now 18,200. So as the base moves higher, we perhaps clear the way out for some sort of an up move as well. Congestion between 18,350 to 18,400, if we go ahead and cross that, would be a big thing to watch out for. Most importantly, the reason why we have congestion is because Nifty Bank is facing supply near record high levels. Now it's just 2.2% away from record high. Yesterday at one point it was less than 1.5% away from a fresh high. The index to watch out for today will be the mid-cap index, mainly because it is weekly options expiry on the mid-cap index today.
Well, Mangalam, the other thing is earnings, right? I mean, 5 days back, earnings, generally the overall picture was looking good, but over the last 3 or 4 days, we've had so many misses, disappointments, especially on, for example, we'll speak with the management of MGL today. Earnings look good, but volumes are very subdued, and that seems to be a trend across companies. So we'll do the full picture once all the earnings come through, but the view there also is getting a little subdued, that like the third quarter, which saw multiple downgrades after the earnings season ended, will we see something similar this time around? It
depends on where you're looking, because all of last year, a lot of the earnings that came by was on account of pricing-led growth and the margins compressed. And this year, it's the other way around, because pricing growth will come down, volume growth at some point will perhaps pick up, and margins will expand.
At some point, Mangal, that's the question. At some point.
I think in that context, L&T's numbers are important, right?
Yeah,
they come out later in the
late
evening.
in the evening, yeah.
And the expectation is that not only will the numbers be good, but the company may surpass its FY23 guidance as well. So that'll be a big trigger for the market tomorrow.
Absolutely. Well, that's in the evening later today by about 6 or so, I think. Well, we'll go on and tell you what's lined up here in the first 30 minutes of the show. We'll get you updates from markets around the globe. Rana Gupta is our guest of the program. He's, of course, with Manulife Investments. We'll have our research team bring you the top 10 stocks to watch out for, as always. And we do a fundamental stock analysis with Deven Choksi. Lots of stocks that Deven wants to comment on, and we want to put his way.
Okay, so let's begin the show then. We have a lot of opinion coming through. Are we all set to hit new highs, or will it take some time? On the equity side, Sanjeev Prasad of Kotak says that the market has lapped up the recent improvement in India's macros, peaking interest rates and better external position. He hopes that the improved macro percolates into better micros over the next few months. He says Q4 FY23 results and management commentary underscored subdued domestic demand and consumption and weak global demand in the outsourcing sectors. He expects a gradual recovery in domestic consumption over the next 2 to 4 quarters. He also adds that valuation is at risk without a quick recovery.
Okay, well, let's get you some money market views now. Kunal Sudani of Shin & Bank says US dollar held ground as market participants refrained from taking large positions ahead of the highly anticipated US April inflation data. He says the ongoing debt ceiling impasse is weighing on the market sentiment. He says dollar index continues to hold at 100.8 levels, and some demand from oil companies was seen pushing the USD INR pair higher. For that pair, Kunal says 81.8 to a dollar acts as a support, while 82.35 to a dollar is a resistance.
And on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond rallied and traded in a range of 6.97 to 7.14%. He says bonds rallied on the back of firm auction demand and favourable global cues. He says the SDL auction also saw decent demand, with the 10-year SDL cut off at 7.44 to 7.45%. Neeraj says the US 10-year Treasury yield made a low of 3.3 after a dovish FOMC, but trended higher thereafter on strong non-farm payroll numbers. He expects 10-year benchmark bond yield to trade in a range of 6.95 to 7.1%.
Right then, let's get stock specific. We do have a lot of stock specific action to track, and we'll get to that in just a bit in our special top 10 segment. But let's look at the stocks that we're looking at. Polo Tyres, Lupin, Birla Corp, Nuvoco Vistas Corporation, Eveready Industries and Nazara Tech on the back of positive news flow. Fats and Agro, we have Castrol and Rain Industries along with Latent Few Analytics, our stocks on our radar, which are likely to open in the red.
Okay, well, Rana Gupta is now joining us. He's Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thanks very much. You know, I just want to start with earnings and your assessment of India earnings so far. I think about 50% of the top, say, 200 companies have reported numbers so far. What's your sense? I think top-line growth has been about 7-8%. Operating profit growth has been around 10%. Will this lead to, or will the next 50% lead to any upgrades, or you think it's going to be a muted quarter for overall F524 expectations?
Good morning. I think when the results event is done and dusted in another week or so, we would see not much change in the overall market EPS integer. But having said that, I think the results, you have to put that into context, because if you look at results of auto companies, result of bank companies, there we have seen very good results. And also numbers into upgrades, as opposed to, let's say, the external facing sector like IT, where there we have seen downgrades. So overall market EPS integer may not change much, but I think under the hood, there are a lot of sectoral shifts that are happening. So we would more focus on the underlying sectoral shifts than the overall market EPS growth.
Got it. You know, another thing that's really improved for a market like India is the fund flows. I mean, it's been 9 straight days of solid FII buying that has come into the market. What has changed? Is it that India has gotten a bit more attractive as far as valuations are concerned, or is growth picking up? And how are you positioned on the Indian markets now?
We have been saying that India looks quite good within the emerging markets, and emerging market complex as such looks good because US dollar looks like it's peaking, interest rates, the peak is in sight, and energy prices are lower. That is typically good for emerging markets, and within emerging markets, I think India also looks well because of the reforms that have happened, digitization and manufacturing. We have spoken that for a long time. Now, of course, from point to point, people notice that and deploy money. And if you're asking me that what the catalyst was for this round of inflows. We would imagine that some of the FIs, they were a bit concerned on the current account, but I think the current account worries, whatever there were, now has also considerably diminished post we saw that tremendous service export numbers, right? So basically, I think that theme that we have been talking about for some time, that fiscal deficit coming down under control, current account deficit improving. So overall, in the economy, deficit is improving, and the savings deficits are improving, the deficits are going down, and the savings are improving. I think that theme is now playing out in data that might have catalyzed more investments from the FII investors into Indian markets.
For how long do you think this divergence can last? I mean, sometime last October, we saw the Indian markets decouple from global markets, did extremely well, only to, come back and begin underperforming for the first 3 months of this year. And now we're back again, outperforming the global indices. How long do you think this lasts?
Well, I think if you look at, even take a step back and take a view and talk about Indian markets first, I think Indian markets are broadly in the range of 16,500 to broadly 18,500 for what's going to be nearly 2 years now. Now, of course, that range is a good to, excites few people, but I think nothing significant has happened for the Indian market to right now break out of the range. I think breaking out of the range will have to wait for some time. We don't see it happening before the second half of this year. So I think near term, some more consolidation. And as you rightly pointed out, Indian markets have outperformed the rest of the emerging markets, even some of the global markets, since about beginning of April. I think that's about 7-8% of, whereas the emerging markets have done mostly not much. It has, how far it will run, when it will stop, it's hard to say. But I would just think that Indian markets is right now is pushing towards the top end of the range. So we would expect some more consolidation around here.
Rana, the bigger kind of overlay is that maybe rates have hopefully peaked, not just here in India, but around the world as well. And that is helpful for PE multiples. Generally speaking, whatever else may be happening under the surface in terms of earnings and everything else. Is that going to be a help in a big way, in your opinion, across sectors, especially expensive sectors here in India?
Yes, I mean, that's really the tricky one, because obviously markets are trading on the basis of the rates will be cut. If you look at all the forward-looking expectations in the US, market is pricing in about 3 to 4 rate cuts by February of 2024. Now, whether that's going to happen or not, that we'll have to wait and see. Now, given the way the inflation data is still panning out, 4.5%, still much above the 2% rate, the odds are that and the economy is still quite resilient. The odds are that inflation continues to remain a bit on the higher side. And if market does not get the 3 or 4 rate cuts that is a price 10, I think till that time, I think it is safer to stay away from the very high PE stocks. In any case, within India, the high PE stocks are mostly in the consumer durable and the retail space. That's one area where we are, from a stock perspective, we are a bit cautious. We would rather play the auto ancillary, the banking, the industrials, and the real estate side.
Okay, when you think about it like that, it has been a really painful period, right, for the market. This range of 16,500 to 18,500 for 2 whole years. Perhaps this could be the year where we break out of that range. Rana, thanks a lot for stopping by and speaking to CNBC TV18. Appreciate your thoughts this morning. Well, that's the word coming in on the global markets and, of course, India. The views are bullish. Let's slip into a quick break. On the other side of the break, we have our entire team joining in this morning to help us with all the top stocks that you need to watch out for. Welcome back, guys. Hope you're having a good morning so far. The SGX Nifty is indicating a good start, 30 points higher, but plenty of stocks to talk about and a lot of positives in terms of earnings. So let's get straight to it. Lupin delivered a very good set of numbers, actually. Ekta's here to tell us what went so damn right this time around. Ekta, over to you.
Thanks for that. Well, yes, Lupin, in fact, came out with what was a good set of numbers. So the revenue was up around 14%. The street was anticipating a 7% growth this time. Margins came in at a multi-quarter high, so they improved to 13% versus 6.9% year-on-year and versus 12.3% on a Q-on-Q basis. The street was anticipating 12%. So there's a marginal improvement which came in on margins. Profit 235 odd crores. Street was anticipating around 156 crores. North America, $175 million in terms of sales. The range was wide for the US sales, but nonetheless, for some analysts, it was largely in line with estimates. But the street was anticipating anywhere between $175 to $192 million. Nonetheless, the US markets did deliver in terms of margin improvement for the third consecutive quarter. India was up 9.4% year-on-year. Growth markets was up 15.1% year-on-year. API business was up 46% year-on-year. So all of the other segments did deliver for Lupin this time. It'll be interesting to see what their guidance would be on key drugs such as Spiriva generic. That would be a key catalyst. But nonetheless, numbers look good.
All right, numbers look good. The other set of good numbers that came through was from Apollo Tyres. Now, there are no surprises here because the entire tyre industry has done very well. But this time around for Apollo Tyres too, very strong earnings coming through. Margins are up 480 basis points year on year because of lower raw material costs and operating leverage. Revenue growth was also quite healthy, actually, a 12% growth in their top line. The EBITDA was up almost 60%, as you can see on the screen, and good growth in margins. Profit after tax coming in much higher than last time around. UBS maintains a buy. Their target is 370 rupees a share. They say the margin beat is very similar to peers, while Morgan Stanley has an overweight rating with a target price of 400 rupees. They say the beat is largely seen in the standalone business, while the European business was in line with expectations. But let's not forget that Apollo Tyres is already sitting at a fresh 52-week high. So perhaps a lot of the good news is in the price already.
All right, stock's done quite well. MRF, of course, started that with spectacular numbers, and other stocks also rallied after that. Well, thanks, Sonia, for that. Now, cement in focus. Birla Corp and Nuvoco reported numbers. Surabhi's got details on both. Surabhi.
Thanks so much for that. So first on my radar is Birla Corp. Now it's a good set of numbers. The numbers were better than the poll. The revenue was up 2% when you compare it to the CNBC-TV18 poll. Came in at 2462 crores. Margins were 60 basis points higher than the poll. Came in at 11.1%. Now the key positives are that the losses at Mukadband have decreased, and the management has also said that the unit has turned positive. Now, there's significant improvement in EBITDA per ton. When you see it sequentially, the EBITDA per ton has come in at 615 rupees per ton, and if you exclude Mukadband, it has come at 689 rupees per ton. The net debt in FY23 has increased, however, by 261 crores. Next is Nuvoco Vistas. It's a pretty inline set of numbers. There is sequential improvement in EBITDA margins. They've come in at 13% versus 10% in the quarter gone by, and it is expected to improve further from here on account of lower costs. Now, EBITDA per ton has also improved quarter on quarter, came in at 732 rupees, but it is still lower when you compare it to Q4 of FY22 when it was 781 rupees. Now, there is reduction in net debt. The net debt has reduced by almost 750 crores from the December quarter, so that's a positive as well.
All right, Surabhi, thanks a lot for that. Looking at a couple of other result reactions today as well. We start with Hatsun Agro. Weak set of numbers coming in. Muted margins on account of dairy inflation. We've been talking about milkflation, that's a new word here, right? And seen a 310 basis points decline in their gross margins. The revenue growth of 10%, also nothing to write home about, given the fact that the company has been expanding its markets and expanding its product range as well, and increasing the prices. So 10% revenue growth is also below expectations, as a result of which the EBITDA has fallen by about 2%. Margins have come off, and the net profit on account of further higher tax rates have fallen by about 40%. Eveready, however, see some green on the stock, primarily on account of strong revenue growth and their losses narrowing. It has already seen a big rally, but this time around in the fourth quarter, revenues have increased by about 18%, whereas the net loss of the company has narrowed from about 40 odd crores to just under 14 odd crores.
All right, Mangalam, thanks very much for that. Now, Castrol and Rain Industries are next in focus. Sonal has got details on both. Sonal, hi, morning.
Good morning, Prashant. Let me start with Castrol, where revenue growth was decent but not that strong. Revenues went up by 5% to come in at 1294 crore rupees. But their operational underperformance continues yet again. Their EBITDA was down 7% and margins declined almost 300 basis points, leading to a profit decline of 11%. The company says this performance was impacted due to inflationary pressures, and that is something impacted margins. Rain Industries also weak set of numbers. Profits declined and so did the margins. Expect these two stocks to be in the red today. Okay, and you take care. Thanks, Sonal, for that. Well, let's move on. Rima is also with us. She's tracking Nazara Tech and Latent View. Rima, how did the numbers look?
Well, Nazara, it's a good set of numbers. Year-on-year revenue growth has improved by 65%. EBITDA margins have improved to 9.4%, and the company has clocked in a profit of 2.6 crore. They've also achieved their FY23 guidance. For the full year, the company has achieved a revenue growth of 75% versus the company's guidance of 70 to 75%, and they've also achieved the EBITDA margin guidance of 10%. They've also achieved a milestone. Annual revenues have now crossed 1,000 mark. So it's a good quarter from Nazara Tech. Latent View, on the other hand, is a bit subdued. Revenue growth at 20% year-on-year. EBITDA margins have fallen down sharply to 21.4%. Profits are down 4%. So I'm going to go with red for Latent View analytics purely because of the margin miss. Look at the way the margins have declined both quarter-on-quarter and on a year-on-year basis. Margins for the company used to be closer to 30% on an average, and it's come down to 21.5% due to increased employee payrolls. They organized some events, so there was an increase in costs associated with the events. And plus, revenues too were slightly lower than I think what the company was anticipating. Back to you.
All right, thanks a lot for that. So let's just get down to all, the stocks in focus. The positive ones are Apollo Tyres, Lupin, Birla Corp, Nuvoco, Vista, Everready Industries and Nazara Tech. While the stocks with negative news flow, there's Hudson Agro, Castrol, Rain Industries and Latent View. That's likely to perhaps open in the red. But, globally things have recovered, especially for crude. So there is some demand that has come back as recession fears have receded. Manisha Gupta is joining in for all the action there. Manisha, of course, there's the US inflation data that everyone's watching out for. But how is the commodity market shaping up?
Well, ahead of that inflation data, slightly choppy, as you can see. And having said that, we still are trading above $70 a barrel for both the crude varieties. And from the lows that we saw in the previous week, when the crude prices hit a low of 17 months, we've seen quite a bit of a gain coming in. So $3 up from the lows in the previous week there. The other thing that the street is watching is the reports that the U.S. will be replenishing its strategic reserves, which currently are at 40-year lows. So if that buying comes into the market, then you are looking at further support coming for the crude oil prices. Having said that, the EIA report that came in yesterday has cut crude price forecast by nearly 7% for this year, because they believe that the production from U.S. will increase by 5% on a year-on-year basis. So we are looking at higher supplies, higher inventories, but the demand really not picking up as so. In other metals, we are looking at copper, zinc, iron ore, even steel prices continuing to gain. So today is the third straight day that in the Asian markets, you are looking at positive trades coming in for many of these metals.
Okay, thanks a lot for that. Well, that's on, the commodities side, but very important, voting is underway in Karnataka today. So that is the big national headline to elect representatives for 224 assembly seats, and the three parties in contention are the Congress, BJP and the JDS. So let's listen into what Finance Minister Nirmala Sitharaman had to say after casting her vote in Bengaluru this morning.
सरकार थी 10 साल 6% के ऊपर 6 का महत्व क्या है 4% कानूनन इन्फ्लेशन रहने का रेट उससे प्लस 2% तक 6% तक कानूनन आप टॉलरेंस बैंड कह सकते हैं उससे ज्यादा लगातार यूपीए के पीरियड में इन्फ्लेशन ज्यादा था इसीलिए इन्फ्लेशन का विषय में मैं जनता के साथ हूं हाँ खोज ना होना चाहिए और कम होना चाहिए मगर विपक्ष को कोई हक नहीं मिलता क्योंकि उनके कार्यकाल को वो देखें
All right, Finance Minister, after exercising her ballot this morning, we'll take a very quick break here. Up next, Deven Chokshi of KR Chokshi will be joining in We'll talk about a bunch of stocks which should be in focus this morning. A little later after that, we'll have Amit Bhagat of ASK Property Funds to discuss the recent closure of their fund and, of course, what's happening in that space. Stay tuned.
Welcome back. You're watching us here on Bazaar Morning Call on CNBC-TV18. In case you just joined us, you're in for a good start. That's what the SGX Nifty is indicating. And this despite the weakness that we saw overnight on Wall Street and the weakness that we're seeing in Asian indices. What happens after we open is the big question. We have Deven Choksi with us now. Deven, good morning. Overnight we did have good results coming in. Two that stood out in particular were from the cement pack. We had Nuvoco Vistas and Birla Corp reporting their numbers. What do you make of them, and what do you make of this pack in general, given that this is an election-heavy year?
Hi, good morning. Well, I think most of the cement companies are possibly having twin advantages currently. One, the demand of tech has started improving in different pockets, particularly because of the government's thrust on infrastructure and the spending thereon. So certainly, the confirmation is coming out as far as the project-related offtake is concerned. I think most of the companies are reporting positive numbers as far as the monthly outcomes are concerned on the production side. And at the same time, because of the cost of production remaining under control, along with the logistic cost, is again suggesting that going forward, we should be having relatively better margins to talk about. In this particular quarter, that is the first quarter of the new financial year, I believe that numbers would be quite handsome compared to what one has seen in the previous quarters of the last financial year. So from a perspective of looking at cement as a space, I think, for investment, I think they are, whatever the troubled times that they had to go through in the last year, probably they have completed that. And I would believe that the higher amount of offtake and at the same time, the margin stability would probably allow these stocks to perform better than what they did in the last year.
Deven, hi, good morning. The space that has really outdone themselves this quarter is Tyres. So all the tyre makers, Apollo, MRF, CEAT, have reported spectacular numbers, as it should have been given how raw material prices have softened. But do you think there is still more upsides here for these names?
Good morning, Sonia. Well, I believe that upside definitely should be seen, particularly from the point of view of the automobile sales is picking up. And what my clear indication is on the commercial vehicles, particularly. I think some of the names which you mentioned, they definitely have a larger segment of commercial vehicle in their portfolio. And that's where I believe that going forward in coming 2-3 years also, I would think that demand is going to remain absolutely very strong on the commercial vehicle side. So would be the demand for consumables, including tires. And should this margin stability continue, which I would like to believe that it will, then in such situation, I would think that the tire companies would report comparatively steady numbers going forward. Not too sure whether all the companies are looking lucrative from the investment perspective, because I think some of them probably may have run up little ahead of time, so they might have some cool-off period in between. But any correction in the price, certainly I think it augurs well for buying these stocks of fresh equity portfolio.
The real estate space has been on fire of late as well, right? I mean, most of these stocks have done well. The property market is booming. So Deven, just stay on. We'll come to you in a bit because we have a gentleman who tracks the space very closely. The ASK Property Fund has closed its latest fund with a corpus of 1,500 crores. This is ASK Property's 6th real estate fund and will concentrate on the top 5 cities and primarily invest in mid and affordable residential development projects. Amit Bhagat, the Managing Director and Chief Executive Officer at ASK Property Fund, joins us now to talk about this. Amit, thanks a lot for joining in. Tell us a little bit about what the prognosis is in the mid and affordable segment. What kind of growth are we looking at? Is there, further price appreciation that you're expecting to see?
Good morning, Marisha, and thank you for having me here. I think after a 5-year lull, real estate has seen its true worth because we have all realized that we need a bigger house and we need a house for sure. I think the pent-up demand and the 5-year lull has led to the actual demand coming in. And I'll divide it into two parts. People who are buying land and people who are buying apartments. In apartments, it makes no sense to be an investor because you pay 5% GST and 5 to 6% stamp duty. So it is a real end user demand which is coming to the apartment segment. Now, if you look at the capital available to the sector, the capital has been depleting and because after the NBFC debacle, and the money available to the sector for growth has been very limited. Because of that, the under construction unsold inventory in every city from 29 and 36 and 47 months has fallen to 8, 12 or 15 months. Now that explains the reason for the price increase in the last 1 year. Because end user came back during COVID because of low interest rates and the actual pent-up demand. And there was an under construction unsold inventory which was declining. And that led to the price increase in the segment. So for the first time, we are actually very bullish on the sector because we feel that this end user demand is a sustained demand which will stay for a longer period because the high interest rates in the home loans are transient and these interest rates will start coming down as inflation cools down and the end user demand will continue because we are a 140 crore people. Yeah.
Amit, hi, good morning. So, two questions. One, where will bulk of this money go? Will you sort of give it to sort of tie up with builders? Will you sort of look at land? Which cities are priority for you? We have the list of the cities which you like, but where exactly is the maximum room for appreciation now? I think our viewers would be interested in that. Your view on that. So, go on.
So I'll divide it into two parts. First, the appreciation part. I will request end users not to be an investor in this segment even now, because as I explained to you, there's a 5% GST and a 6% stamp duty. So you become day one 11% negative and rental yields are 2 to 3%. But having said that, when it comes to our fund, we focus on Mumbai, Pune, Bangalore, Chennai and NCR. We remain in cities and we don't go to extended suburbs, so we don't go outside the city. We focus on affordable and mid-segment housing. And we primarily give money to replace the earlier lender or for working capital for completing the project. So we do a financial closure of the project. These are all residential mid-segment projects, which are focused in growth markets, which are closer to job markets, especially white-collar job creation. And we ensure that the project is completed. And that is our endeavor. And we only focus on developers who are customer-centric and focused on completing the projects as committed to the investors or to the buyers.
You know, we understand the macros of 140 crore people looking to buy houses in COVID and all of that. But the near term does not look very promising. The reason why I say this is, one, because interest rates are high. Secondly, you know, investments in property looks like it has been front-ended, especially because of the announcements that were made in the budget. So the last quarter was good. And the third part is that, you know, we aren't seeing a lot of jobs in the startup space or the job market that you speak about. And that's largely because of the funding winter that we've seen. So would it then not make sense to deploy money later than just now?
So I think there is a gestation period. Whenever you deploy money, the project starts yielding returns 1 year after deployment or investment. That is one part. Coming back to the high interest rates, I think the high interest rates, as I mentioned, will be transient. When inflation cools down, the interest rates will go down. These are typically 20-year mortgages, and 20-year mortgages does not impact if the interest rates are high for a year or two. Yes, it is a barrier for an affordable housing where the end user in the affordable housing will definitely look at his EMI and the cost of paying to the lender, and he may defer his purchase a little bit. Having said that, if you look at who buys a dwelling unit for end use, when his job is stable and he can see his income for 20 years. So if the funding winter has dried up for startups, it does not impact us because startup employees of startups do not buy till their job is stabilized.
Got it. I mean, I get, we get that. Just one point, right? I mean, someone in a city like Mumbai bought an apartment in 2012, 2013. It took them 10 years for prices to come back to their purchase price. I mean, if you're living in the house, they say you should never look at what the price is. But I mean, it's wealth effect, right? I mean, to see the property value go up. We are now back above the 2013, 2012 peak in cities like Mumbai. Do you think from here prices will appreciate? I mean, just your view. I get the disclaimer that when you're buying a property you should buy it for use and not speculation. But just wanted your view.
So if you look at Mumbai data, I think the under construction unsold inventory is around 12 months. And if the buyers will always come back to the market, whether it is equity or real estate, when there is a fear of missing out. So if quality under construction unsold inventory is limited, although the launches will subsequently increase because till last year there was
so yes or no, Amit? We're short on time. Yes or no? You think prices will be higher?
End user has to buy because prices will become higher more than the inflation.
Okay. All right. We'll have a detailed chat later. Thank you very much for coming on a quick chat. Good luck with deployment of the funds. Appreciate it very much. We'll take a quick break here. Anuj will be with us for the quick trade setup on the other side. And of course, our technical experts will be with us as well. The standout brokerage report of the day comes up with Nimesh a little later. And of course, the top stocks to watch out for post that. So power pack lineup all the way to market open at 9:15.
Welcome back. The big question that we're asking, that is it time for the markets to hit all-time highs, or do we have to be a bit more patient? Anuj is joining in for a quick trade setup. Anuj, we're not too far away from all-time highs, but there's a lot of data coming through, right, from the US, so a bit more patience perhaps?
Yeah, morning Sonia, Prashant and Mangalam. Well, since it's cricket season, the market is right now like nervous 90s. It's just when you're so close, but that's when you get a bit nervous, and it's the hardest part. And talking about games, so there's another game which is on right now, which is the game of ping pong in the market. Look at yesterday, it was all over the place. The open at 18,300, high of 18,344, low of 18,229, and close at 18,264. In fact, if you look at the last 4 days, plus 166, minus 187, plus 195, it's really been all over the place. This is what happens when you are approaching that last remaining congestion zone. The Nifty is trading, in fact, in the last remaining congestion zone. Mid-cap and Bank Nifty are very close to 52-week high. In fact, yesterday the mid-cap index was within 100 and 150 points of a 52-week high, and then it had the last hour slip. The FI momentum is very strong. Today, of course, you have the Karnataka elections as well. So, depending on the exit polls, etc., there might be some impact. But look at the numbers, whether it's from Lupin or Apollo Tyres, numbers continue to look very strong. On the Nifty, yesterday what was very interesting was heavy call writing at not just 18,300, but even 18,350. This 50-point strike is normally active only on the expiry day. But yesterday it was quite active. So it tells you that this is a big congestion zone, 18,347 to 18,378. If you take out 18,378, expect big short covering. On the Bank Nifty, yesterday, of course, there was a Fin Nifty impact, the expiry impact, which happens normally on Tuesday. And Wednesday, normally you try to make up for that. There's, again, heavy call writing between 43,400 to 43,600. That's your resistance zone, 43,512 to 43,659. Support, of course, has been very strong between 42,800 to 43,000. The only thing is, need to see SBI and ICICI Bank. Yesterday, both of them were quite weak and ended at low point of the day. They are the market leaders or the leaders of the Bank Nifty. So I'll keep an eye on both these names and see whether this congestion zone is taken out or not. If you take out 43,700, all-time high should be a matter of time.
All right, Anuj, thanks a lot for that. In fact, you spoke about the sporting season and nervous 90s. I think what there is no season for is the traffic. And I look at all-time highs as the destination. And there is a lot of traffic towards that destination. Two big signals that you have to navigate through. One of them would perhaps be the Fed event. The second one would be the inflation data. And low apparel, always a fair amount of traffic. So you will get to your destination, but the time it takes depends on the traffic.
Lower parallel is fine. It should not be Elphinstone Bridge. That's
So as for the market, are we in Bandra or are we in Lower Parel?
I think we're in Karnataka. Bangalore, right?
All right. Well, let's go across to Mitesh Thakkar and Sudarshan Sukhani now joining in. Mitesh Thakkar, of course, from Closer Home, and Sudarshan Sukhani from NCR. How's the traffic looking, gentlemen? And by traffic, I mean the markets. Do we see some congestion or do we reach our destination soon? Mitesh, you go first.
I think it does look like it's a bit crowded out there. I think we are hitting some important supply pivots around this 18,250, 350, and then 450 levels before the all-time highs are being taken. Also is the fact that we are slightly overbought on the intraday and the hourly, 2-hourly setups, because we've had a good run. So I think next few days, as Anuj just pointing out, could be like nervous 90s. You will have bouts of sellings and buying. But I think very clearly the broader direction, the medium to longer term charts are positively biased, which means that we will possibly clear the all-time highs, and which also means that any consolidation or choppiness will give you entry points. So for me, 18,150 is an important level to watch out for. Declines close to that for me will be buying opportunities. On the Bank Nifty, once we start getting past 44,000, once we clear the previous highs, then I think we are looking at a faster momentum. So I think next few days could be slightly edgy, but I think overall we will head up.
All right, Sudarshan, how about you? Momentum has picked up, but do you think there are some roadblocks now? And how are you feeling about the market today itself?
Good morning, Sonia. See, momentum has picked up. We are in a strong uptrend. Yesterday was a choppy day, but not a down day. Now, yesterday was a narrow range day. A narrow range day usually represents consolidation in an ongoing trend, and the trend is up. So after that narrow range day is resolved, I would expect the markets to rally again. An immediate target seems to be 18,500. I would be a buyer today. Now, rather than buy on dips, I would just hold on, buy whenever I want, and wait for that 18,500 and avoid and ignore any intraday fluctuations. My stops would be 18,100, and I would just be long and carry it. Even with the CPI numbers coming in the US, it's worth carrying the trade.
All right. And individual stocks, Mitesh, how would you play the market?
So I have more of buy calls. Axis Bank, I think, finally looks like getting into some kind of an uptrend. Buy here with a stop just below 880 for a target of 910. MGL had a good price and volume breakout yesterday. That's a buy with a stop at 1,056 for a first target of 1110, and then 1130 can be looked at. Tata Communication is a buy. Keep a stop below 1279. Look for targets of 1345. And one sell call, that's ABFRL. It's been a sell earlier as well. Now can be sold fresh with a stop at 209 for a target of 193.
Okay, and Sudarshan, how about you? What would your stock ideas be?
Well, there are many on the buy side. ICICI General Insurance, ICICI GI is a buy. The stock has been consolidating, broke out yesterday. Buy with a stop under 1,070. My only short is an intraday short, and always I give only intraday shorts, is JSW Steel. It is possibly ripe for some kind of a small correction. We'll stop above 740. Remember to keep it intraday. Vedant is a buying opportunity. Vedant has been consolidating for almost 2.5 months now. Now, at some point, the sense is that it should break on the upside. It's a positional trade. Buy with a stop under 274. And M&M is another consolidation, whereas buying opportunity comes in, stop under 1211.
All right, gentlemen, good to speak with both of you. Thanks very much, and we'll have you back soon again. We'll take a very quick break here with news that the SGX is still indicating a higher start, but as I was saying right at the top, it's likely to be tentative, and you will see this play out all day with the polling going on in Karnataka, and of course the inflation numbers later tonight. We'll take a break here. We'll be back. We have the management of Raymond to discuss their fourth quarter earnings. Amit Agarwal will be with us. Stay tuned for the conversation.